Welcome to lecture 12 of business taxation. In this lecture, we are going to cover the income from property topic. We had been discussing this topic for last two lectures. We would first understand what is advanced taxation and what is the percentage that is applied on advanced tax. Then we would have certain numerical example on the deductions that we have already covered in our previous lecture. Okay, so starting with the advanced taxation. So let's just say company rented out a property to Mr. A and the rent is, let's just say yearly, it's 1 lakh rupees. Now, irrespective of what the tax the company would pay, the rule says that Mr. A would, rather than paying 1 lakh rupees to the company, Mr. A would pay a lesser amount. By how much? By 15%. So instead of paying 1 lakh rupees, although the rent is 1 lakh rupees, instead of paying 1 lakh rupees to the company, Mr. A would pay 85,000 rupees to company as rent. Why would he deduct 15%? He would deduct 15% as advance tax and deposit it with the tax authorities. This is called advance tax, the tax that is deducted at source. Remember when we are discussing salary chapter, we said that when an employee receives a salary from the company, the company deducts taxes at source, right? And those taxes are then submitted by the company to the tax authorities, and the employee only would have to fill the form which is called the tax form, right, rather than paying the tax, because the tax had already been paid by the company and it was deducted at source. Similar is the case with the rent. The amount is deducted at source. Now this is for filer, right? But before 2020, the rate for filer and non-filer was different. For non-filer, the advanced tax rate was 17.5%, but for filer it was 15%. But 2020 onwards, the rate had been standardized, and whether it is a filer, the company is a filer or not. Remember, we are discussing the income from property for the case of company. Whether the company is filer or not, 15% of tax would be deducted as advance tax. So let's discuss examples and let's cover all the deductions or the ideas that we have discussed in our previous lectures. So business income of Allied Service Limited, how do we know it is a company or individual? We know it from this statement. During the year ended is, so this is not the 43 million is not the income from property, rather it is income from business. What would we have to do with this? We will discuss in a while when we are solving this question. The company has rented out a property at 18 lakh rupees per month and the company is filer. So in this case, filer or non-filer is irrelevant, but anyhow. Then there is other information. We have ground rent of 16 lakh, repair expenses of 9 lakh 80,000 rupees, collection charges 20 lakh rupees, advance tax withheld is 32 lakh 40,000. And let's solve this question. Okay, so starting with the income from property, because it is 18 lakh rupees per month, if you multiply by 12, we get 216,000. That is 21 million 6 lakh. Then we less the deductions. First deduction is repair allowance. Remember, whether it is mentioned or not that the company had certain repairs, we would straight away deduct repair allowance. That would be 1/5 of the rent, the gross rent, 216,000,000, and the amount turned out to be 4 lakh. Sorry, it's 43 lakh 20,000. So although the repair expense is 9,80,000, right? So we do not need to actually consider this repair expense anyhow. We would not take it into account. We would simply calculate 1/5 of the rent and we get the amount. Then ground rent. At ground rent is 16 lakh. Then we have collection charges. And for collection charges, the rule is that actual expenses are 6%, whichever is lesser. So actual expenses are 20 lakh rupees and we would have to calculate the 6% is 20 lakh. And 6% of this 216,000,000 is 1,296,000. So which one is lesser? Obviously, this amount is lesser. 20 lakh was actual expenses and the 6% is 1 lakh 29,000. Sorry, it is yes. So so the actual expense were 20 lakh and the 6% is 12 lakh 96,000. So we consider 12 lakh 96,000. Okay, so if we add these, if we deduct these expenses from this income from property, then our amount turn out to be 1,438,400,000, and this amount is basically the taxable income from property. Now we would add income from business. Remember, it was given as 43,67,000. Okay, if we sum this up, we get 292,91,000, and this is our total income for the company. We would have to calculate taxes on this amount. So the tax would be 29% of this amount would be 84,94390. But if we go back, and this had already been paid by the tenant as advance tax, so we do not need to pay this amount, right? 32,40,000. This is already paid. This is advance tax. So the amount that we need to pay as tax for this specific year is this amount, 52 lakh 54,390. Okay, Let's have one more example. This is supportive limited company name. Income from business is given, and we have income from dividend, income from property rented out, then we have insurance premium paid on the property, then we have rental income paid, uh, then we have ground rent, repair expenses, municipal tax, and then we have unrealized rent. In case of unrealized rent, we would assume that the company have made all the efforts to recover this rent, but in vain. Okay, so in this case, the income from property is 3269. We would less the deductions. So first we start with repair. Repair is 1/5 of this amount, that is 653,990,000. Then it is insurance premium. Then we have share in profit. Remember, share in profit we have already discussed. Okay, how do we know it is not mentioned share in profit? But this check this out. This is basically a financial institution. It is a bank, right? It is a bank, and the rental income paid to this bank is basically the share in the rental income. Although this is not explicitly mentioned over here, but from exam perspective, it would be explicitly mentioned that it is a share in income. So this amount is again deductible allowance. Then we had ground rent, and ground rent is 24,79,000. Then we have municipal tax, and municipal tax is 45,76,500. And then unrealized rent, which is again deduction. Okay, so the total amount that we get after these deductions is 216,547,700. This is total income from property. Then we add the income from business, which was 4,573,56,000. Okay, once we add this up, the amount that we get is, we would calculate 29% on this amount. That would be our tax. So this 29% turns out to be, so our tax is 1969 13103. Now in this example, if we go back, there is no mention of advanced taxes, right? But we would always assume that advanced taxes had been deducted, so we would always calculate the advanced tax. So advanced tax on this amount, 15% of advanced tax withheld, would be 49049,250. Once we deduct this, we get 147,863,853. This is the tax that we need to pay. But hold on for a second, and you would see that there is an income from dividend. Now income from dividend for a company or individual is considered same. It is fixed tax regime, so we would add the income from dividend. We would calculate taxes at 15% on this amount, and the amount of dividend is 1,12,000. So 15% of 1,12,000 is equal to 16,800 800, we would add that with our total tax, and the tax that is payable, that we need to pay, the company need to pay, is the addition of these two amounts. Okay, so this is example that you need to I would recommend that you go through it yourself. All of the conditions are similar to as we have discussed before, but there is one additional thing that we haven't covered in our previous lecture, and that is amount paid to bank. So whenever you get a loan and when you need to repay that loan, you repay it in two parts. One is the interest part that you would have to give each month or each quarter or each year, whatever the conditions are, and then there is a principal amount that you need to pay, right? So when you are giving back the loan, you are repaying the loan, you pay it in chunks in addition to the interest amount. So the amount paid to the bank is a return of principal amount. This is the principal amount that we are returning, and this is the interest on the borrowed amount. We are assuming that this amount is borrowed for the construction of a building. Remember, this amount would not allowed as deduction, rather just the interest is allowed as deduction. So we would just have to deduct interest. One more example, most of the things are similar, but this idea that we haven't covered in our previous examples is lawyer fee to defend the title of the property. Here this amount is paid to as a lawyer expenses, so this again is deductible allowance. Then insurance on the premium property we have already discussed. Property tax paid, tax withheld by tenant is already given. In some cases it won't be given, but you would always have to assume that you need to calculate that 15%. And this rental income paid to HBFC is the share in the rental income. Again, it is deductible. Admin and collection charges are also given. So that's it. So we have covered the income tax property, income from property tax for the company. Now we would move towards the income from property tax for the individual. For individuals, we have different slabs, and for company the rate is 29% flat rate. So irrespective of whether the company is making a higher rental income or lower rental income, they would have to pay a flat 29%. But in case of an individual, we have different slabs. First thing, that if an individual is earning less than 2 lakh rupees per annum, this is per year, as income from property, remember it is not income from other aspects, it is income from property. Let's just say it is rent. Then there would be no taxes. But if the rental income is greater than 2 lakh rupees but less than 6 lakh rupees, in that case 5% of the amount exceeding 2 lakh rupees. For example, let's just say I'm an individual and my rental income is 3 lakh rupees per year. So this is greater than 2 lakh rupees, so I need to pay taxes. How much should be the taxes? I would first deduct this 2 lakh rupees from this amount. The remaining amount is 1 lakh rupees. So I would pay 5% of this 1 lakh rupees, which is 5,000 rupees. Let me clear this up. If rental income exceeds 6 lakh rupees but is less than 10 lakh rupees, so in that case 20,000 rupees would be the fixed amount and 10% of the amount exceeding 6 lakh rupees. So let's just say my rental income is 70,000 rupees or 7 lakh rupees per year. So till 6 lakh rupees I would deduct it, right? I'm left with 1 lakh rupees. So 10% of amount exceeding 6 lakh rupees. Amount exceeding 6 lakh rupees is 1 lakh. 10% of this amount would be 10,000. So what would be my taxes? My tax would be 10,000 plus this 20,000 rupees. So I would pay taxes of 30,000 rupees. Remember, in case of an individual, there is no deductions. Deductions are not allowed. By the way, there are other slabs as well. You can go through them, and in there are more slabs to it, but I haven't added them. In next video, we are going to solve certain examples on this aspect of property taxation.